Welcome back to Halftime Report on CNBC-TV18. It has been a blockbuster debut for Tata Technologies. So just pull up that stock once again. In case you missed all the action, it listed at a premium of over 140%. And it made, this is the best listing that we've seen since November of 2021. Remember, it is after 2 decades, almost 2 decades, that a Tata Group company is listing. So big one here. Rima caught up with Warren Kevin Harris, the MD and CEO of the company, to talk about the stellar listing, and began by asking him about the possible merger with Tata Elxsi and if this IPO listing is the first step towards an eventual merger with Tata Elxsi. Listen in.
I can't comment on the strategy of Tata Elxsi. All I can say is that we are focused very much upon building out the Tata Technology story and leveraging the profile and the trust that's been extended into Tata Technologies through the listing to accelerate the progress that we're looking to achieve as a company. We're excited about the space. We're very, very excited about the contribution that India can make to the global engineering and manufacturing industry, and we're looking to be at the forefront of the evolution of the market, and again the contribution that India will make globally.
Can you talk about what could be the revenue run rate for the company going ahead? Will it be 15 to 20, 20 to 25? Could it be north of 25? The business plan of the company, it's positioned for what revenue run rate, CAGR, going ahead?
Well, we've established significant momentum over the last couple of years. I think the growth both in terms of our revenue and in terms of our margins, has been at the top end of the market. We're going to continue to work hard to sustain that momentum, and again continue to look to different ways to add value to the customers that we support. We do not provide guidance in terms of specific numbers, but we're very confident that we can meet or exceed the projections that are being positioned for the global ER&D market.
And can you tell us the projections for the global ER&D market, which you're looking to beat?
Well, Zinov have positioned that the market is likely to grow in double-digit terms this year. We certainly expect to meet or exceed those numbers.
Got that. Winfast, which is a Vietnamese EV player and one of your key clients, I believe in your top 5 clients, has seen a very sharp drop in its stock price. Year to date, Winfast is down 79%. Is there some concern? Can Winfast, which was a big driver of growth for you last year, is there any risk that Winfast may slow down, or any of your top clients slowing down?
From time to time, different customers will slow down in terms of their investment in new products. We certainly expect with Winfast, they are about to launch 4 electric vehicles in different parts of the world, and we would expect them to focus upon building product and selling product over the next 6 to 9 months. But Winfast have recently broken ground in North Carolina on a new manufacturing facility in order to be able to satisfy the capacity that they are building into their organization. They're going to have to invest in new products as early as next year. We are very, very proud of the value that we've contributed to Winfast, the role that we played in the maturation of that company, and we certainly expect to maintain the strategic partnership that I think has been very meaningful and very important to both organizations.
And directionally, can you tell us your 2 anchor clients, JLR and Tata Motors? Is their spend in 2024 going to be similar, less or more than what they've spent this year and last year? Just directionally, if you could tell us, is the spend from your anchor clients going up?
Yeah, I think directionally, the direction... Right. I think that both companies have made public statements in terms of their expectations to meet or grow the capex that they have supported this year. So we certainly expect growing momentum with regard to the relationship of both Tata Motors and JLR. And as with the rest of the industry, Tata Motors and JLR are pivoting from a portfolio that's been predominantly biased towards internal combustion engines towards electric vehicles. And we are very much at the forefront of that transition.
What are your plans with respect to diversifying away from Tata Motors and JLR?
Well, we've grown our portfolio outside of the group at a faster rate than we've grown it inside of the group. Some 10 years ago, our revenues from Tata Motors and JLR made up the majority of our services revenue. At an aggregate revenue level last year, the Tata Motors and JLR contribution was less than 33%. So we've been growing the portfolio in automotive outside of the Tata Group. We've also been growing in aerospace and transport, construction and heavy machinery. We were impaneled by Airbus 18 months ago, and we've been opening offices in Toulouse and in Hamburg. We've been building our aerospace capabilities both here in India and onshore in Europe, and we're very, very bullish about the prospects of not only the Airbus relationship, but our entire aerospace business. You know, the fact that the group has now invested in Air India and is investing in new aircraft for Air India is providing the group with significant influence. We expect that to provide tailwinds for Tata Technologies.
Fair enough. So you have three key verticals. One is automotive, majority of your revenues. Aerospace, where you recently got impaneled by Airbus, and there are plans by the Tata Group in aviation to grow very aggressively. And the third lever is the heavy construction machinery. Amongst these three verticals, which one is growing the fastest? Yeah. And can you provide some growth rates?
I'm not going to comment on growth rates, but with transport, construction, and heavy machinery, and aerospace, that represents today less than 10% of our overall revenue. So we're coming off a relatively low base with regard to those sectors, and so in percentage terms, we're seeing growth, particularly in aerospace, that is outstripping what we're seeing in automotive. But we expect demand and opportunity to continue to be very strong in all three of the sectors that we focus upon. So we're very bullish about the continued momentum that we've established for the company.
Say 3 years down the line, what could be the contribution of aerospace and transport, construction, and heavy machinery? If you had to hazard a guess.
Well, if you look at the market growth projections for aerospace specifically, if you look at commercial aircraft, there's about 23,000 aircraft that are in productive use today. In 20 years' time, that's expected to get to about 46,000. So the demand in aerospace is likely to grow exponentially from the low base during the pandemic. So we fully expect aerospace to be a very important part of our mix. And I think if we look 3-4 years down the road, we would expect aerospace, transport, construction and heavy machinery to be about 20% of our mix. We continue to expect strong demand in automotive, but we do see the verticals outside of automotive in percentage terms growing at a much faster rate.
So aerospace, transport, construction and heavy machinery revenue contribution can go up to 20% in the next 3 years from currently below 10%, but of course on a low base. Got that. The last time we spoke, we chatted about margin improvement and how the company's positioned for incremental improvement in margin, and your North Star margins are 20% plus. Can you tell us what will be those, what will drive margin improvement? What are the levers that you're working with?
Well, it's the standard operating levers for an organisation like ourselves. So it's improvements in productivity, it's improvements in span of control and our people pyramid. But the biggest contributor will be offshore. Or offshoring of services. You know, today our offshoring is about 50-50. Given the type of business that we're involved with, particularly our ability to be able to take on turnkey product development, we think we can get the 50-50 to about 65-70. We don't ever think that it's going to get to the 80-20 or the 90-10, again, because of the importance of managing the stakeholders onshore. But we think that as we progress from 50-50 to 65-35 or 70-30, we think that will drive incremental improvement in margins. You know, so we're looking at 30-40 basis point improvement on a year-on-year basis.
Okay, so that's the management of Tata Technologies. Just want to turn